All right, so let's go over the market, starting with the ES, which is a total disaster today. All right. See, the attempt to go higher failed. It took out the prior day high and then totally rejected. So we're watching this really closely because this can be really bad in that attempt 1 fail, attempt 2 fail, and now, on the daily it's breaking. You have significant amount of volume. The breaks are not, they're not a small break. So let's get rid of that. Anyway, so tap break here. Definitely want a level there. Should reject. Okay, so where was I? All right, let me bring out the chart. So the first move that I saw, but unfortunately it didn't go to target and totally reversed, was right before the open. You had this wave, this buying wave here, and this weak pullback. So what was this? Is it here? Yeah. So the market was at this point. Now I know that this was the prior accumulation that caused the breakout high, and market went and it basically tested that same support, this support level right here, where you see the original minor accumulation that led to a minor move up. So the market basically pulled back today before the open and went to that same level of support. Was it right here, I think? No, was it here? This was the support. I'll show you on the bar. So over here, you had this rally. All right? Then it pulled back and it had this long wick. This long wick is not bearish because it's like a wick down on this candle and a wick up on that candle. So, I mean, I know what they're trying to do. It's basically just spring everybody and then attempt to see if there's liquidity higher. That's what this maneuver is. So, and this accumulation over here. So the idea was to tap after this. This has no volume. Right? If you compare, it tried to spring 20, pull back 21, okay, problem, retest, only 9, reversal, went straight up. So this was really the move to get. What's the high? 91. So this was the really nice move, but as you can see, it just went crazy. It's not moving normally. So usually when that happens, it's a stop run and can be a quick reversal. That is a big problem. So you want 1, 2, 3, and then 3, 4 strong bars and pull back, not 1, 2, 3, 4, 5, 6, 7, 8 with a big move like that, because the pullback is going to go all the way back. And that's what happened. So the long got screwed right here. Because all they wanted to do was take out these guys and then go short. So that's what happened. So as the move went down, you're going to notice, what did I do? That here, the move climaxed. How it climaxed, but it climaxed. Heavy volume climax right there, as you can see. So, I mean, you have to judge this accordingly. Like, the signals don't mean anything without judgment. Signals to me don't mean anything. All signals, because there's too many factors You gotta know time of day, volatility, all that stuff. Anyway, so over here it climaxed, and then it had a secondary test, and then the buyers came in, pulled back, and they did this breakout. Now the problem is this going to trend, or is this going to be a counter trend to test this area? Right? Turned out it only did the counter trend to test this area. So it was going beautiful break, full test, but again, it only went up here and died. All right, these guys came in, the selling ensued. There was one more opportunity, because this is a climactic area, that the market would come back and do a full test, because I thought it was going to go right here on this spring or double bottom, whatever, this test right here. When it reversed like that, and there was no volume on the selling, look at this, the red, there's nothing, right? So it made a lot of sense that this spring would take and this would fly up. Unfortunately, the sellers had other ideas, and then they took it down here. So it's okay, maybe this spring, because you see this bar here and this accumulation area right there, there's another spring here. Right? You had this spring, beautiful thrust. Okay, it's ready to go. It did a full test, came back all the way into the accumulation area, which is basically support area. It's ready to go, thrust up, break. But there's some sellers in this market that are really preventing the market to go higher. They're just preventing the market to go higher. The candles try to close green, but the sellers at that time come in strong and they reverse it. That's what kept happening. And so, the buyers are still there. It comes back down lower, spring again. Came retest, break again. Just like you had this bar break this high, this bar breaking this high, this bar broke that high. And it rallies and it pulls back, and this candle was going green. But this is where the sellers came, or the algorithms came, and they shut it down. If this thing left, if this thing closed green high end right here, guarantee this, forget it. It would just, you would have, this would be a target. But they shut it down. They shut it down quick and didn't give the bulls. The bulls actually took it all the way up here. But that's when the sellers really, with a lot of strength, shut that wick down, shut that rally down, shut that green bar down. So that was a red bar, and then just took out the lows aggressively. So game over for the bulls. The bulls had a lot of chances over here after it climaxed. They had all this action. Okay, fine. It didn't get past this rally. Comes back here. They could have rallied it. Here, they could have rallied it. Here, they could have rallied it. Finally, extended levels here, they could have rallied it. But in fact, I think there was accumulation against this area. But the bears just came in very aggressively and sold. All right, so that's the tale of the ES today. The best opportunity, honestly, was in the morning right here. The quick move, get done for the day, right? The second one, actually, after this climax, reversal, pullback to test, and then break. This made the higher high, which means it's confirmed. Climax, secondary test, all of that shit, and then the markup bar right there. So this opportunity where the pullback happened was the opportunity, but it didn't last. And instead, the higher time frame sellers came in and just whacked it. There was a sell opportunity. I'll show you. All right. So first thing to note, I've always explained the importance of the Wyckoff price thing, where you have what is it called? Accumulation markup, distribution markdown, right? So we're always watching for that, always, because that's the way the market moves. All right. Now, and in those bases, you have shakeouts in the form of springs and upthrust, basically false breakdowns and false breakouts. So you just always keep that in mind, that when you have a base, you have a pullback, you have a base, it breaks down, but if it goes the other way, then that is an excellent opportunity to go the other way with it. All right, because it means there's a false move and it's going to go the other way. So here's what I saw. In this area, it was climactic, and I see that it broke the base down on heavy volume and totally reversed, and it had the high volume print up there, making a higher high. So these bulls were ready, and they did go up, but then that's when the sellers came in, and guess what? They sold. They did a base breakdown right here. They absorbed all the buy orders and broke it, pulled back, held, reattempt, and break. So this is very important to understand this type of behavior, because this is how the market, it moves like this. You have accumulation markup, distribution markdown, and so either it's small accumulation, small distribution, small markup, small markdown, but it happens all day, every day. All right, so that's the story of the ES. Maybe I'll bring up gold also. So, yeah, this was funny, because this is on sells, but it gave a buy signal up here. And how you know is when you have all this price going down, and I explained in the false breakdown, right? So there's the false breakdown. Here you have your base. There you have the breakout. So there's your spring or shakeout of this base, followed by the breakout. Now you know that's going that way. Now how long, you don't know. But it offers the pullback to test, entry, and rally. So this takes a significant amount of skill to be able to execute, because when it's breaking down, you want to watch the high volume breakdowns and then have them hold. But if they get taken out and the base gets taken out to the upside, like right here, it breaks, comes back within the base, and breaks with volume. So then you just wait for the pullback and all of that. All right, so that's all I wanted to share. Again, the price cycle is accumulation markup, distribution markdown. When you need to have that in mind, you need to have higher time frame trend in mind, and you need to have levels in mind, and then just watch it. Watch how the market plays out. And also, it's also a good idea not to use very lower time frame charts, because what is accumulation will look like noise, and what is distribution will look like noise, and it's not distinguishable. The behavior is not distinguishable on very low time frames, so you cannot make a judgment on it. It's just noise, because there's so many orders coming through. You cannot make a judgment about, is this move is this behavior real, and will it lead to something that is an opportunity. So that's why you want to stay away from the lower time frames, because they have too much noise. All right, take care, bye.